below 23,000 mark, whereas Sensex ends below 76,000 mark. The highlight of the day comes from the broader markets recover sharply to outperform benchmarks. Mid-caps gain over 1.5%, whereas small caps jump over 2%. Citigroup has come out with a note on specialty chemicals on the back of implications of possible reciprocal tariffs. Chemicals are vulnerable to US tariffs. India's tariffs and organic chemicals are higher than US. Citi believes that the actual impact is likely to be lower owing to offsets from tariffs on other exporters. Nifty 50 stocks correct nearly 12% in the last 5 months, indicating a lull in the bull run period. For broader markets, Nifty Mid-Cap 100 corrects 19% and Small Cap corrects 22%. There are multiple reasons which can be attributed to the fall, like the FII selling, cuts in Indian Inc.'s earnings, relatively higher valuations and weakening global and domestic macros and currency depreciation. Transformers and Rectifiers India receives the 166.45 crore order from Yoseng T&D India. The company will supply single-phase coupling transformers and the order is dated to be executed next financial year. As on December 31st, 2024, the company's unexecuted order book stands at 3,686 crore rupees. Shares of Rail Vikas Nigam jump over 10% after it wins an order worth 554 crore rupees for Bengaluru Suburban Rail Project. The order includes construction of 9 stations, which is to be executed in 2 years. The company's order book as of December 2024 stands at 90,000 crore rupees, that is expected to touch 1 lakh crore rupees by FY25. Ashok Leyland bags an order to supply fully built buses to Tamil Nadu State Transport Corporation. These buses will be used for regular city operations. The order is worth 298 crore rupees and will be executed between June and August 2025. The stock traded around 220 levels today. Ola Electric's vehicle registration process may be impacted in February as the EV player negotiates with its vehicle registration agencies to reduce cost and increase efficiency. But this is only a small hiccup as the Ola Electric expects sales to continue being strong through the month, with registration dips to recover in just the next few weeks. Raymond Lifestyle trades lower. The company reports a cybersecurity incident. Some of the company's IT assets were impacted, which have been isolated. The company says that the core systems and operations are not impacted by cybersecurity incident and adds that the company is investigating the matter and taking appropriate actions. Trump's tariff tantrums continue as the president imposes 25% tariffs on imported autos, drugs and chips. These new duties would most likely widen global trade war and hit key consumer products. Trump has also recently proposed reciprocal tariffs on metals and aluminium over and above existing metal duties. Tesla aims to enter the Indian market in the second half of 2025. Sources tell NDTV Profit. The company will import fully built cars from Berlin. It's a bit unlikely that cars will be assembled in India immediately. Tesla Model Y is the first on the list to be sold in India. Model S and X and Cybertruck might not make it to the selling list. A district consumer court in Bengaluru has fined PVR Inox with over 1 lakh rupees for wasting viewers' time with long ads before a film begins. This is after a viewer filed a complaint against PVR Inox claiming that they showed ads and trailers for more than 30 minutes. The court directed them to compensate the complainant with 20,000 rupees for mental agony and 8,000 rupees for litigation costs, while also imposing 1 lakh rupees in punitive damages to be deposited in the Consumer Welfare Fund. The amount must be paid within 30 days, failing which a 10% annual interest will be applied. PVR has also been warned to stop engaging in unfair trade practices. In response, PVR Inox has decided to file an appeal and has reaffirmed commitment to fair practices. Further details are awaited. Aon India projects a salary increase of 9.2% across corporate India in 2025. This is the lowest salary hike since COVID. The real wage growth projected is at 5.1% for 2025 on the back of falling inflation, whereas the uptick in real wage growth is highest since 2018. The insurance regulatory body IRDAI forms a committee to review insurance reforms under former SBI chairman Dinesh Khara. The committee will recommend changes to the Insurance Act and submit its first report in 3 months. Remember, the last such insurance exercise took place in 2022. The IRDAI is expected to submit and review their formal amendments to the Finance Ministry. Hexaware Technologies lists at a premium of 5.3% on the National Stock Exchange and 3.3% premium on the BSE. While the shares of the company were issued at 708 rupees, they marked their debut on the D Street at 745 rupees on NSE and 731 rupees on BSE. Multi-bagger stock Nava jumps 13% as board approves 360 crore rupees share buyback. The ferroalloy manufacturer, in a meeting held on February 19, sanctioned the repurchase of up to 72 lakh fully paid up equity shares with a face value of 1 rupee each at 500 rupees per share. Delhi High Court, in a dispute between IRCTC and Brindavan Food, has ruled against IRCTC. The court has mandated IRCTC to pay claims worth 33 crore rupees plus interest to Brindavan. This dispute stands on the back of claims for unpaid dues from Brindavan Food. The company had been granted catering services on Rajdhani, Shatabdi and Duronto trains under the purview of IRCTC. Gyanesh Kumar takes charge as the 26th Chief Election Commissioner. After taking charge, he makes an appeal for voters to come and vote. He says that the first step for nation building is voting, and every citizen who is above 18 years should become an elector and vote. The much-awaited decision on the new Chief Minister of Delhi will be made in the BJP Legislative Party meeting at the party's Delhi unit office in the evening. Today, the BJP has come to power after 27 years, defeating the Aam Aadmi Party in the Delhi Assembly polls. Preparations were complete for the Legislative Party meeting that is expected to begin around 7 p.m. today. Meanwhile, preparations are in full swing for a grand swearing-in ceremony of the new government at the Ramleela ground on Thursday afternoon. Rajasthan Finance Minister Divya Kumari presents the state budget. In the first, the state's budget focuses on green theme with a thrust on renewable energy and rural and infrastructure development. The battle between Tamil Nadu's ruling DMK and the BJP over the centre's 3-language policy and the imposition of Hindi ramped up yesterday. This after Deputy Chief Minister Udayanidhi Stalin says that states that accept Hindi lose their mother tongue and that his state is ready for a language war. Tamil Nadu has historically had a 2-language policy. It means that it teaches Tamil and English and witnessed massive anti-Hindi agitations in the 1930s and 1960s. High-level committee under the chairmanship of Home Minister and Minister of Cooperation Amit Shah approves 1,555 crore rupees of additional central assistance to 5 states. The 5 states are Andhra Pradesh, Nagaland, Odisha, Telangana and Tripura. The additional fund is for floods or the flash floods, landslides, cyclonic storm of 2024. Uttar Pradesh Chief Minister Yogi Adityanath refutes a report which claimed that fecal bacteria present in water at Mahakumbh made the water unsuitable for bathing. Refuting the findings of the report, CM Yogi says that the water at the Sangam, the point where river Ganga meets river Yamuna along with Saraswati, is fit for drinking. The International Air Transport Association, or the IATA, has opposed Delhi International Airport's proposal for a variable tariff structure. The association labelled the tariff structure very complex on both passengers and airlines. The tariff hike could also dampen the demand. Airports Economic Regulatory Authority of India has been urged to reject the discriminatory tariff structure proposal. Donald Trump takes a hit at Ukraine President Volodymyr Zelensky as he expresses his disappointment for not being invited to talks in Saudi Arabia, which was for ending the war with Russia. Trump blames Ukraine for its war with Russia. He says that Kiev should have struck a deal before the war erupted in 2022. A full-scale Russian invasion sparked the war in Ukraine almost 3 years ago. US President Donald Trump and his billionaire ally Elon Musk sat down for their first joint interview with Fox News' Sean Hannity, during which the Republican and his advisor were full of praise for each other. The pair talked on various issues, including Musk's role as an advisor to the president and the White House's stance on his influence. Trump stressed that Musk won't be involved in any decisions involving his companies, which the South African-born billionaire seconded, saying his primary role was to provide technological support to the president. Pope Francis has been in hospital since last week and his health condition is becoming more complex. The Vatican says that he has now developed pneumonia in both lungs. This comes after Monday's announcement that Pope was detected with a polymicrobial infection of his respiratory tract. The ongoing ICC Champions Trophy 2025 started the first match of the season with the clash between Pakistan and New Zealand. The defending champions started with a positive start to the tournament by winning the toss. They chose to ball. The Kiwis, considered as the serious contenders for the trophy, they will need a strong performance in their opening game. India and Bangladesh are set to face off in the second match of the ICC Champions Trophy 2025. The game will be played at Dubai International Stadium in Dubai on Thursday. Their recent ODI matches, India completed a clean sweep against England. However, Bangladesh struggled in their last ODI series against West Indies. Well, that's a wrap on Market Express. Stay tuned to NDTV Profit. There's more lined up ahead.
Hello and welcome to NDTV Profit. We are all about AI now. That's what the world is talking about. And to get into this phase of AI, to train people to understand what are the functions, where to use, two gentlemen who are actually taking it a notch above. We have two companies, in fact, Microsoft as well as Upgrad. Joining us on the show is Ronnie Screwvala as well as Puneet Chandok. Welcome to the show, gentlemen. My first question coming to you is, let me start with Microsoft. Why AI? And do you think India is AI ready? Because it's a chicken and egg situation right now, right? You need AI, and I think not everyone understands what AI is. But what would you have to say on it?
Listen, a couple of things. I think first is AI is the most transformative technology that at least we've seen in our lifetimes, and it's here and now. It's out of the labs now, it's real. To your question on India, I think India is getting ready. I think India's ambition of an AI first nation, and I truly think India can become an AI powerhouse, not just for India, but for the globe. And we as Microsoft are committed to making that happen. We want to train 10 million people in India over the next few years on AI. And to me, skilling is a real answer to get India ready to be the AI powerhouse that we need to be. And that's why this partnership with Upgrad and Ronnie is something that we're truly excited about.
Absolutely. So, Ronnie, did you see this gap coming with regards to AI? I mean, yes, there is a demand-supply situation that comes in, right? There is demand. And for the supply, you're partnering with Microsoft. But from a person's perspective, are there students who come to you and tell you that, yes, this is the gap where where training is needed?
So firstly, I'd say there's no chicken and egg anymore context. It's pretty much there. I think we need to adapt it. In fact, we need to be proactive on it and not reactive on it. I think I would say it's not about seeing a need gap arise. I think it's been an evolving situation. So this is a lot more about it being evolutionary in every sense of the word. So I think in the last 5 years, when we've looked at how online will change learning, then skilling, today, I don't think anyone gets into the asking. I think everything that we do has a component, some component of AI in it, because it's either in the input stage or in the output stage. But the learning part, it's very much there.
Right. So what's your vision, Puneet, with regards to skilling and AI, right? I mean, you said you're looking at 10 million students, but overall from a accessibility perspective, from a usability perspective, how are you looking at it?
So I think building on what Ronnie said, right? One, we looked at some data and we did some research on this, right? 3 out of 4 workers in India today are bringing AI to work, something or other. We also looked at employers, and 2/3 of the employers today tell us that they will not hire anybody without AI skills. Now listen, if you bring these two statistics together, and to Ronnie's point, right, skilling is the answer. And there's never enough of it, right? So train 10 million over the next few years. With upgrad, we're going to train 1 million in the next year. I think that is the answer. And I always tell my teams the opposite of knowledge on AI is not ignorance, it's the illusion of knowledge. So we got to get out of this and start getting everybody skilled on it.
We need to accept that even 10 million is a drop in the 300 million that actually needs to get there. So it's momentum.
Okay, so why upgrade? Why no one else? I mean, what is it that you saw that upgrade
I don't think
was the
there's
right
no
partner?
one else when it comes to Microsoft.
No, I think, listen, and by the way, I think, first of all, I think given just the nature of the ambition and the scale of what we want to do, make India an AI powerhouse, all of us need to come together. So it's not just about Microsoft or Upgrad. I think why Upgrad and Microsoft coming together, one, I think our mission matches, right? I think Ronnie's vision and the Upgrad vision of training people at scale in India, and not just training them for the heck of it, but employable skills for STEM students is something that we kind of resonate with. Our values match. And then we're now putting a program around this, right? We're going to train 1 million people in India in the next year. We want to build stuff, right? The auto grader that you're building. There's some really fascinating work to be done in AI, in teaching and growth and coaching. And that's something we're really excited about.
So Ronnie, coming to you on this, there is a vision, there is a purpose for whatever Microsoft and Upgrad are doing together from an AI perspective, right? From here on, I'm sure to skill these number of people, you will need to have a trained staff. What's the ideology? How do you manage that part of it?
I think there's a lot of technology, firstly, that's going into that. I mean, if you look at what we're going to do with marrying the ChatGPT along with the Copilot of Microsoft, putting it in there, training 1 million STEM workers, I think a fair bit of technology goes into that. Second, it's an iterative process, which we're constantly doing there. Third, we have live almost 250,000 students at any given stage, learning from machine learning to data analytics. Now, all of them are getting imbibed in that. To this course specifically, our entry point is actually a lot more for what we would call Bharat, actually. Because I think everyone looks at the top of the funnel, but the middle of the funnel is really, everybody needs more than an elementary context. And again, I would just say, it's my favorite saying nowadays, that it's more an evolution. It's not an apocalyptic thing, because I think everyone sort of looks at it as like, oh my God, you're going to displace things. Actually, you need to cannibalize it. So I think from a trained staff and faculty point of view, we've got the wherewithal, because we've already built that sense of SMEs across the board.
And what do the price points usually work like? Is there something which is affordable to all?
So I said 500 rupees is a great entry point. And then if you want to do a little bit of an advance, it gets to 12,000, 15,000 and 19,000. So all in a very affordable manner, in which case you kind of add it to that. And I think this is the entry point. We want people to come in and not be intimidated.
And will this be mainly meant for private sector, or will it also involve public sector?
No, I think it's for everybody. I mean, 25% of the workforce works for the government in some form or the other. So I think anyone and everyone will come in, it will be an optionality. It's more a B2C than a B2B also to that extent, right? Because at the price point at which we've got it, we want people to come in and just tank up.
Interesting. Any last comments in terms of from where you've started in the next 5 years, where do you see this partnership going?
I think a couple of things. First, I think our mission is AI for everyone, right? Which is how do you get everybody on the train? And I think AI is a great leveler. It's a great way to democratize technology. So initiatives like these matter. It's super important for us. Second, I think the answer is skilling, right? Going back to your first question, chicken or egg, is India ready? India will be ready if we can train India on AI. And I think that's why this partnership matters to us a lot as part of a bigger mission of 10 million people to be trained. Getting 1 million STEM students and workers trained and employed is something that we are really excited about.
Right. Any closing comments?
Yeah, no, I'd only just add to that by saying, actually, if you talk about the 5 years, it'll be broken up into sort of 12, 15 different gaps. So I think the nimbleness, and I think the nimbleness of organizations today are being constantly evolving and changing. I think Microsoft is at the pinnacle of that, of just being nimble and being proactive. And I think they're going to chart the way in which things go forward.
Absolutely. And I think lots to look forward to as well. Thank you, Puneet. Thank you, Ronnie, for joining us on the show. So that's about the kind of skilling that you will need, and if so, I think the best way to look at is come to our Microsoft through an upgrade, and I think you will get the best.
First thing I'd like to say, actually instead of Viksit Bharat, we should call it Reviksit Bharat.
Reviksit Bharat.
Reviksit Bharat, because if you read the history of India, in the AD 1 to 1000, India had almost 33% of the world's GDP share. And we are talking in 2047 to reach that level again. So if you are talking of that, and that's where something where the government is working towards, it's very important for the success of scheme like this where the industry leaders do come together. In addition to that, the government policy makers have to join hands together, very strongly supported by the financial markets. Because without financial institutions coming forward, a collaboration between these three segments is extremely critical for manufacturing to really become large in the country.
I don't think it's anything out of the ordinary. Markets do not go up in a straight line. They're bound to produce some volatility from time to time. The genesis of this particular one, I think, was the slowdown in growth that happened largely because the government started consolidating its fiscal deficit. And the central bank continued to pursue, I would say, quote-unquote, hawkish policies. And that, I think, set the stage for a slowdown which has, I think, lasted for 2 quarters. In my view, we are already out of that slowdown. The budget was a phenomenal one. I have titled it a magic budget. It continues to consolidate the fisc, but at a much slower pace, only 40 basis points versus 120 in the trailing 12 months. It has increased capex share of GDP by another 20 basis points to another record high. And of course, it has cut tax rates as well. So it has got an incredible combination for the economy. And at the same time, most importantly, the RBI pivoted. And the market has just ignored what I think is one of the biggest pivots in modern central banking history of India, where it has gone all out to convert liquidity into positive territory, cut interest rates, and taken the foot off the regulatory pedal. If credit growth doesn't accelerate from 11 back to 17, I'll be very surprised. So this is like, I am just amazed that people don't see this as an opportunity. In hindsight, they would realize it.
बजट भाषण सुना, उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
एआई बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए, और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई, इसके लिए सेंटर्स बनाए हैं।
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11:30 a.m. Monday through Friday, only on NDTV Profit.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Do you really know the company you invest in? What's the picture behind presentations and claims? Is the outlook as rosy as the company claims? Know your company, powered by NDTV Profits Research, shines a light on the biggest stock market movers. Know your company at 11.
It's an NDTV Profit exclusive. A day after Tesla posts the hiring update for India on LinkedIn, sources now say retail operations for Tesla are likely to start in the second half of 2025. The Elon Musk-owned company has also listed new engineering and IT jobs for Pune and Mumbai. In a fresh salvo on global trade, US President Donald Trump floats tariffs of 25% on automobiles, semiconductors and pharmaceuticals. The announcement comes on the heels of 25% tariffs on steel and aluminium. NDTV Profit's first conclave ended successfully yesterday. We saw a slew of corporate leaders and impactful market voices delivering their views on important matters like tariffs, manufacturing and the India story as a whole. A 30-year-old man in Bengaluru wins 65,000 rupees in compensatory damages after he sues PVR Cinemas, Inox and Book My Show for wasting 25 minutes of his time by running lengthy commercials before the screening of a movie and causing mental agony. Nifty Sensex end flat amid range-bound trade. The highlight comes from the stellar recovery in broader markets that snap a 9-day losing streak to outperform benchmark indices. Swearing-in ceremony of the Chief Minister and new cabinet of Delhi will be held at Ram Leela Maidan tomorrow, 20th February. However, suspense and speculation over who the next CM of Delhi is continues. The Delhi High Court goes hard on the centre and Indian Railways over the stampede last week at the New Delhi railway station in which 18 people were killed. The court demanded to know why the railways had continued to sell tickets in excess of the numbers of passengers who could be accommodated on a couch. After a slew of controversies, the ICC Champions Trophy begins with host nation and defending champion Pakistan taking on New Zealand in the opener at the National Stadium in Karachi. India plays their first match tomorrow. The 50-over tournament makes a return after an 8-year hiatus. Hello and welcome. Good evening. This is Profit 360 on NDTV Profit and I'm your host Malika Mishra. Along the next half an hour, we will bring you the latest on markets as well as national and international news. It's an NDTV Profit exclusive first. The most exciting news of the year. Elon Musk's Tesla is all set to finally make its grand entry in the Indian market. We have learned that Tesla will start its retail operations in India in the second half of 2025. Also, their cars will not be assembled here and will in fact arrive fully assembled from Berlin. Understandably, this could possibly heat up competition in the EV space. My colleague Tushar, who's brought us this story, is joining us now. Tushar, firstly, what kind of Tesla car are we going to see on Indian roads and as early as second half of this year?
Yeah, that's right, Malika. So what we are gathering from sources is that Tesla will enter India in the second half of 2025 with the Model Y in tow, because that's one of the two right-hand drive cars that Tesla makes at this point of time. The Model Y right-hand drive, or the RHD, is manufactured in Berlin, while the Model 3 right-hand drive is manufactured in Shanghai. So the likelihood of the Model Y right-hand drive coming in from Berlin is higher as compared to the Model 3 RHT coming in from Shanghai because of the import restrictions that India has placed on China at this point of time. The Model X, the Model S, as well as the Cybertruck will not come to India because they are only available in the left-hand drive configuration at this point of time. Like you said, yes, completely imported cars, completely built-up units, which is CPU, no assembly operations at this point of time. New jobs have also been announced, one for an engineering post in Pune and as a charging developer in Mumbai.
Okay, got it. And right now, Tesla's entry will also create job opportunities, as you said. And we saw on LinkedIn yesterday that Tesla was hiring for 13 positions. And today we're seeing more openings across Mumbai and Delhi for especially engineering, IT, R&D, and more such venues. Now, obviously, implying that it's not just one arm or department of the company that's looking into hiring from India, right? Give us some more sense about what kind of job opportunities are we going to see, and where else can people expect to apply?
So most of the jobs that have been listed on LinkedIn as well as on Tesla's careers page on its website are to do with sales and service operations. So essentially front end as well as the back end for their showrooms that will actually come up in BKC in Mumbai as well as AeroCity in Delhi. That's what sources are saying, and that has also been reported by other publications. Essentially, the bulk of the hiring at this point of time is for the retail operations. Only 2 positions have been for beyond that, so to speak, in terms of, say, R&D, supply chain. We also know that that the company Tesla has stepped up its hiring or stepped up the workforce for its supply chain within India. Remember, the company already imports into the US about $1 billion worth of auto components from the country.
Okay, got it. Now let's talk about the competition right now. We saw yesterday Indian players are unfazed by Tesla coming in. Mahindra & Mahindra's Group CEO and Managing Director Anish Shah told NDTV Profit at the conclave that happened yesterday that he's confident about competing with foreign players.
Because that's exactly the question that was there 25 years ago when various deep-pocketed global players came into India and Mahindra was written off as dead, saying you're not going to be able to compete with them. Right? That's happened on multiple occasions. Today, we have the products that speak for themselves. And in fact, we went to the extent where at our launch, at our test center in Chennai, we actually had some of the best vehicles in the world there along with our vehicles, and we invited the folks at the launch to drive all of them. And our vehicles stood up extremely well against some of the best vehicles, some of which were priced 3 times or 4 times our vehicle as well. So that confidence today comes from the people we have, from what they've done, from what they've developed. And therefore, we feel fairly good about the fact that we can compete with various folks.
And then Chairman Anand Mahindra also took to X and said Mahindra is here to stay and will be relevant in decades to come after a user asked him about Tesla. But Tushar, what have you gathered on the competence of Indian players? Do they really have no reason to worry at all?
Yeah, actually, both the Mahindra executives are right. This is 2025 and not 2021 when Tesla first brought the Model 3 as well as the Model Y for testing in Indian conditions. Now both Mahindra with its B6 and the XEV9e have some really good products which are built as an electric vehicle ground up. Again, obviously, MG as well as Tata Motors are doing wonders in this space. The EV market in India is growing at about 20%. So the EV ecosystem in India has also matured. Charging is more commonplace as compared to 5 years ago. So in the event that Tesla decides to go down to those levels of 25 to 35 lakh rupees, yes, it will ruffle some feathers for Tata Motors and Mahindra, but I'm sure it seems like it that they will actually hold their ground in that space. What's more worrisome or immediate impact will be for the Germans, the Audis, BMWs and the Mercedes-Benz, who play in the 60 to 70 lakh rupees price bracket for their entry-level electric cars in India. That's where the Tesla Model Y as a fully import will sit at this point of time. When manufacturing starts happening, if Tesla decides to start manufacturing in India, it will go up against Tata Motors and Mahindra. But by that time, both these companies, as well as Maruti Suzuki and Hyundai, will be more than ready for the challenge that's coming up.
Right, thank you for explaining that story to us from all sides possible, Tushar. Viewers, moving on in another addition to Trump's tariff saga, US President Donald Trump is likely to impose 25% tariffs on imported automobiles, semiconductor, chips and pharmaceuticals, a move that could significantly impact global trade. Trump suggested that auto tariffs could take effect as early as April 2nd, coinciding with cabinet reports on trade measures.
We're going to be announcing some very, very big, momentous decisions are being made by companies all around the world, the biggest, and they want to come back into the U.S. Car plants are being canceled in other locations now because they want to build them here. I think it's a very important thing, and you'll be seeing this over the next probably over the next 2 years, to be honest, but you're going to see a lot of it over the next couple of weeks. A lot of big ones are going to be announcing.
Mr. President, have you decided specifically what the auto tariff rate should be?
Yeah, I probably will tell you that on April 2nd, but it'll be in the neighborhood of 25%.
What about semiconductors and pharmaceuticals?
It'll be 25% and higher, and it'll go very substantially higher over a course of a year. But we want to give them time to come in because, as you know, when they come into the United States and they have their plant or factory here, there is no tariff.
Earlier, President Trump implemented a 25% additional tariff on imports from Canada and Mexico and 10% additional tariff on imports from China. Energy resources from Canada faced a lower 10% tariff as well. President Trump took bold action to hold Mexico, Canada and China accountable to their promises of halting illegal immigration and stopping the flow of poisonous fentanyl and other drugs into the United States. My colleague Puneet will give us a better perspective on the impact of Trump tariffs on the automobile sector.
The Trump administration has come out and announced another essential 25% tariffs on automotives, pharmaceuticals, as well as semiconductors. And we speak about the automotive part currently because, while India's overall share of export of automobiles is quite minimal, the auto component and the tire makers might get impacted because of this particular move. Now, we've spoken about this in the past as well, that, companies like Sona, BMW, as well as Samvardhana Motherson are key focus on the export markets, while, players in the tire space like JK Tires as well as Balakrishna Industries have focused on revenues and have local manufacturing facilities as well. So we just break down some of the key companies to watch out for in case these tariffs do come in. The first one is, of course, Sona BMW. They have roughly 40% of revenues coming from the North America region. Now, what is unknown is how much is it which is localized, which won't get any kind of tariffs. That is the kind of number that the company doesn't give out, but they have an overall exposure of 40% in terms of revenue. They also have an operational plant in Mexico and another one coming in about 3 to 4 quarters time. So any kind of tariffs will be detrimental for the company. The second one, Samvardhana Motherson. Now, they have roughly about 400 facilities all over the world. Some of them are, of course, in the North American region, but currently about 18% of the revenue comes from the US, while roughly about 4% is coming from Mexico, and they already have and are commissioning one more plant in Mexico in this particular quarter itself. So any kind of measures will, of course, be very weakening in terms of the profit margin for the company. And
right. And despite Trump's mega announcement on imposing reciprocal tariffs on a variety of imported products, industry leaders across India Inc. seem to be in a wait-and-watch mode. We, in fact, spoke to various business moguls at the NDTV Profit Conclave, and most of them echoed confidence and eliminated fear of being negatively impacted. Let's give you a peek into some of their comments.
Our situation with America is pretty much different than many other countries. And therefore, as I said earlier, we complement each other. We can give mutual concessions to each other, tariff reductions, make it easier to import and export both between the two countries. We've already taken a significant number of measures to strengthen the US-India relationship. We have both strategic, bilateral, multilateral engagements. We have defense ties. We have strong ties in education and people-to-people ties. So together, we are working on several initiatives. Trade will supplement our efforts to do much greater good for the people of US and India.
While we talk about the tariffs, I think, first of all, I think it's going to be more bilateral, because I think when we're talking about two countries, they've already come to a conversation where they're going to be talking about growth in both the countries, and it's going to be beneficial to both the countries. So I think for me, I am more positive about it. To Mr. Kurakwala, when he talked about it'll be passed on to the consumer. For us in home textiles, it is a very small part of that wallet share where, we are that towel or a sheet or that rug that they use, and it is very, very sensitive.
Yeah,
so I think it will be something that we will have to work mutually.
Basically, to make a change in formulation, for example, takes roughly 3 to 5 years. So from that context, there is, unlike steel or cement, you can switch suppliers at a day's notice. You can't do this in our industry. So the view I have is short term. Any tariff coming on Indian goods will be passed on to American consumers and Indian companies will not be affected. Okay. But long term, one doesn't know what happens after 3 to 5 years.
In an interesting case, a 30-year-old man in Bengaluru has won 65,000 rupees in compensatory damages after he sued PVR Cinemas, Inox and Book My Show for wasting 25 minutes of his time by running lengthy commercials before the screening of a movie and causing mental agony. In his complaint, Abhishek MR alleged that in 2023, he booked 3 tickets for the movie Sam Bahadur for a 4-5 p.m. show. He claimed the movie was supposed to end by 6:30 p.m., after which he planned to return to his work. But to his utter surprise, the movie began at 4:30 p.m. after advertisements and trailers of movies were streamed, which wasted nearly 30 minutes of his time. PVR has also issued a statement saying they will appeal as they have a strong case and did not violate any trade practices. My colleague Shubhana is bringing us all the details from the ground.
A district consumer court in Bengaluru has fined over ₹1 lakh on PVR and Inox for wasting viewers' time by showing long ads before a film begins. Now, a viewer has actually complained against PVR Cinemas, claiming that they were showing and telecasting ads and trailers for over 30 minutes before the scheduled time of a film screening. Because of this, a viewer was actually late to work. Now, the consumer court, apart from the fine, has also ordered PVR Cinemas and Inox to pay ₹20,000 to the complainant for the mental agony and inconvenience, and as well as ₹8,000 for the expenses that he bore to file the complaint. Now, the consumer court has also ordered PVR Cinemas and Inox to stop engaging in such unfair trade practices and to make the payment within 30 days to Consumer Welfare Fund. Now, the matter is dated as of December 26, 2023, and the viewer had actually purchased 3 tickets for the movie Sam Bahadur.
Let's now take a look at the Indian stock market. Indices closed flat as concerns over potential US tariffs on automobiles, pharma and semiconductors weigh on sentiment. Sensex ends below 76,000 levels, whereas Nifty ends below 23,000. The highlight, however, comes from broader markets that snapped 9-day losing streak to outperform benchmarks. Harsh is joining us with a complete market roundup.
Well, the Nifty closed absolutely flat in trade today, but, some bit of positivity, at least in broader markets. Let's look at the Nifty 50 index first. Let's look at it intraday. We've gone higher, but we've come off those highs as well. So it's a little bit of a bittersweet, but we've closed flat, and that's the one key positive on the index itself. That's the intraday chart. Just off the lows, but off the highs for sure as well. 23 and 50 is what we've done, so maybe 110 points odd lower from the highs. But let's talk about the Nifty 50 heat map. And what you'll see is while financials did fairly decently for themselves, with some of the PSU banks as well as the slightly medium-sized private sector banks doing very well. What you did see was IT was the key drag. And within IT, TCS, Infi, and that's because of the Capgemini commentary which came out. And that kind of led to the whole sector seeing a bit of a drag. FMCG also was fairly muted. Look at the likes of a Nestle. Look at what a Trent has done today. So largely 0.5 to 1% lower on some of those FMCG names. Britannia was down 1.1% odd. Some names which stood out, a BEL, a Hindalco, some of the top gainers, and Dr. Reddy's was the top loser in trade today. Let's look at the mid space. The small and mid cap space was buzzing in trade today. You look at the advanced decline as well. We saw a healthy one at that, 1.5% on the Nifty mid cap, 2+% on the Nifty small cap. And when you're looking at the advanced decline, the breadth was extremely healthy. So nothing like what we saw on the Nifty reflected here. So that's one of the positives that we take home. But the other piece is also with regard to sectors. And let's zoom in a little bit on that. You look at IT was sulking, 1.3% lower. Pharma was down 0.7%. FMCG 0.25%, slightly muted. Auto was flat. And auto particularly under pressure because tariffs, of course. Pharma too. Similar reason. Let's look at what did well. Within the broader markets, Realty was the one index that stood out along with the metals pack as well. Those are the BSE 500 top gainers, top losers for the day.
Whoever has control over AI will lead the global soft power. That's the word coming in from India's first AI unicorn, Fractal AI's Shrikant Velamkani. From the sidelines of NDTV's maiden conclave, my colleague Rishabh caught up with him and discussed the global AI landscape and India's potential in this space. Listen in.
See, AI is one of the most game-changing, general-purpose technologies out there. It's on the same scale as internet, mobile, cloud, but only much bigger. And it's probably bigger than all of the three things combined. And because it's general purpose, it means that it can be used across a wide range of applications in defense, in civilian uses, and a number of other places. And because it's such a powerful technology, it also has impact on how industries will be shaped, jobs will be shaped, and therefore whoever has control over this technology and the advances in this technology has higher bargaining power, soft power in the world. So you can see that people want to be ahead. And the DeepSeek revolution that happened just a month ago, right, when DeepSeek was launched, before that the prevailing notion was that AI models are very expensive to build, not every country can afford to build them, and you know what, people are so ahead of the race that don't compete with us. But what it has done is two things. Number one, it has told us that the AI revolution is just getting started. We're in the first chapter of this book, not the final chapter of this book. There's a lot to do. And number two, that it's not that expensive. A country like India with 1.4 billion people absolutely must compete in this race. My guess is that in the next 10 years, for every major company in the world, India will be the second largest destination of talent after their home country, if not the greatest destination of talent. So that is the power that we're talking about. Now coming to your question on AI and what role does India have to play on AI? So you're absolutely right. India already has the world's best talent in AI. It's 1 in 3 AI researchers worldwide is of Indian origin. So therefore, India is obviously contributing to the AI mission. Some of the greatest researchers I've met in AI globally have been of Indian origin.
In fact, viewers, at a dedicated panel discussion on India's positioning in the field of AI, where Microsoft India's Puneet Chandok and Upgrad's Ronnie Thruwala also weighed in. Take a listen.
AI in the next few years will be a guardian angel. He'll be a coach, he'll be a companion to all of us. He'll have a lot of intelligence, he'll have a lot of empathy, he'll have a lot of agency. I think he'll make all of us a lot more efficient and effective at what we do.
Empathy. So how smart is that? Because if you're getting into a very exciting theme already. Empathy.
I think technology, for the sake of technology, of course matters, but what matters is how technology feels, right? And I think where these agents and where this AI is headed is a lot more personality, a lot more context on who you are. And I genuinely believe in the next 5 years, it'll be Puneet plus Puneet's AI. So if somebody hires me, if I'm on LinkedIn as an example, I'll say it's Puneet plus Puneet's AI. It'll be you plus your AI.
All right.
And I think that's the world we're getting into.
Ronnie? 5 years from now.
I mean, if intelligence means artificial intelligence, it has to be a 2 plus 2 is equal to 22. And I think that's what it will be, because it's going to be a combination of both. And I think for all of us, we need to take it that it's going to be in that manner, rather than actually looking at it as going to be a threat. I think today everyone's looking at it much more from a threatening perspective. And again, as my favorite saying goes, overall, we need to take this on as more as an evolution, more than an sort of an apocalyptic event where we'll always keep dreading it. And if you differentiate between the two, I think it's going to evolve. I think 5-year statements today will be almost impossible. We'll need to be better than astrologers to actually talk about where that takes it.
Gyanesh Kumar has been appointed as the next Chief Election Commissioner. He is the first CEC to be appointed under the new law with regards to the appointment of members of the Election Commission. His term will run until January 26, 2029. My colleague Sunil Prabhu joins us with more details on his appointment and the process involved.
Well, as you rightly pointed out, Mr. Gyanesh Kumar has taken over, and the first thing that he said is that the voter who turns 18 and enrolling them and making them vote is uppermost in their mind. The Election Commission will always be uppermost the interest of the voters, something that it is constitutionally mandated to do so. The Supreme Court will also hear a matter regarding his appointment, which has now been postponed to the 19th of March. And it's something that the Supreme Court will look at the constitutional validity after Parliament passed a law amending what was a unanimous judgment of the Supreme Court wanting an independent selection body which had the Chief Justice of India. That was removed and replaced by a cabinet minister. That is now going to be legally discussed, and ultimately today the Supreme Court said we'll hear it on the 19th of March. But nevertheless, in the days ahead, the Election Commission has its task cut out because it's going to be under great amount of scrutiny among stakeholders about holding a free and fair election.
Right. Moving on, the Adani Foundation has prepared a new framework for empowerment of women in the country. It's called the Supporting Her Exponential Empowerment, that is SHE. It outlines a holistic framework for empowerment of women across all stages of her life, from infancy to the adult stage. NDTV's Himanshu Shekhar spoke to the CEO of Adani Foundation, Abhishek Lakhtakia, on the SHE framework. Listen in.
So Adani Foundation has a legacy of 28 years of empowerment, and we have been working at various life stages for very long. Now what we have done is we have compiled the women empowerment journey through a life cycle approach, and through that we have created a framework SHE, which says that if you work through a butterfly effect and touch each life stage with a critical intervention, you will see an exponential empowerment in the women's journey. So for that, you have to look at infancy stage, a child stage, a youth stage, an elderly stage. You have to do health intervention, education intervention, livelihood interventions, but those which are critical to that particular age group. So not just one particular age group or one particular intervention, but the holistic life stage approach with multi-sectoral approach, you empower a woman. So this is what have been now consolidated under framework SHE, which we call it Supporting Her Exponential Empowerment.
Well, that's all the time we had on this edition of Profit 360, but do stay tuned to NDTV Profit for more news and updates.
भाषण सुना उसके बाद मेरा पहला एक्रोनिम निकाला मैंने, वो था RRR, रिस्पॉन्सिव, रिस्पॉन्सिबल, रिफॉर्मिस्ट, और मैंने कहा रिवॉल्यूशनरी। हाउ डिड यू अराइव एट दिस नंबर ऑफ 12 लाख रुपीस?
हमें लगता है टैक्स पेयर उस लेवल नंबर से टैक्स भर रहा है, क्या उनको हम कुछ कर सकते हैं?
प्राइवेट सेक्टर कैपेक्स अभी तक वो इन्वेस्ट क्यों नहीं कर रहे हैं, जबकि आपका इकोनॉमिक सर्वे ही बताता है कि वो कैश पाइल पे बैठे हुए हैं।
अगर कंजम्पशन बढ़ता है और उसके तहत लगता है कि ग्रेटर इन्वेस्टमेंट का पॉसिबिलिटी है, वो भी अच्छा ट्रिगर हो सकता है।
AI बहुत तेज़ी से आ रहा है, तो जॉब के चैलेंजेस होंगे, स्किल के चैलेंज पहले से हैं, तो जो ट्रांजिशन पीरियड का स्ट्रगल है, नौकरी मुझे अभी चाहिए।
पूरे साल का एक्सपोजर दिलाने के लिए हम इंटर्नशिप प्रोग्राम ले आए और इसके साथ साथ इस बजट में भी ट्रेनिंग फॉर एआई इसके लिए सेंटर्स बनाए हैं।
Tax regime for individual. In fact, there has been discussion on how to sort of reduce the tax rate.
I am now happy to announce that there will be no income tax payable up to income of 12 lakh rupees.
This entire special package and measures are kind of focused on AI skilling and how to sort of facilitate the AI centers which is existing at this point of time.
Now a center of excellence in artificial intelligence for education will be set up with a total outlay of 500 crores.
Well, welcome to 2025, the big idea. And we have the top team of Citi in our studios to try and understand how is it that they think about the year ahead. We used to do a quarterly conversation with them about how results have gone by. But at the start of the year, it's pertinent to talk about how does the Citi think tank think about 2025 as a year. With me, Surendra Goyal, Head of India Research at Citi. Kunal Shah, Director of Indian Banks and Financials at Citi. Arvind Sharma, Director of India Autos and Transportation, and Rashi Chopra, Director, India Metals and Cement. All of you, thank you so much for taking the time out. Absolute delight to have you. And I think it's just pertinent to talk about 2025 because if people were cribbing about how Indian markets are not giving the opportunity, maybe, just maybe, this dip gives the opportunity. Surendra, let me start with you. And on hindsight, while you may not have changed your targets, etc., but suddenly a target of 26,000 makes you sound bullish relative to what's happening in the markets and others. Tell us about how do you think about 2025 as a year for Indian markets?
Sure. Thanks for having us on the show. And just to give some context to the target, when towards the end of last year, the market was at more than 25,000, our target was still 25,000. So we rolled it forward and now it's 26,000. So we are more constructive on the market compared to say 3 months and 6 months back. And it's a combination of 2-3 reasons which are kind of playing out together for being more constructive. Firstly, if you look at the growth slowdown that we have had, say over the last 6 to 9 months, firstly, public capex was slow, government capex was slow for a bit. So that in December saw a good recovery and should improve going forward. Secondly, the budget did provide the tax cuts and interest rate also. We have seen cuts and we are expecting more cuts as we go forward. So I think a lot of those things should help growth as we go forward from here. And which is why at a overall earnings growth trajectory, Nifty earnings growth trajectory, we are expecting the low to mid single digit growth this year to improve to low double digit growth in the coming year. So that is the first argument. Secondly, valuations. There has been a fair bit of a pullback. Nifty had gone to even 22 times 1 year forward. Now we are below 19 times 1 year forward. So I think, and that's like the 5-year average, 19 times. So in that context, it is a lot more reasonable level. And the third thing I would say that large caps, there are enough stocks where valuations are now becoming more reasonable. So compared to our view, say some time back, we are more constructive and that is what is reflected in the 12-13% upside that we have on the market from current levels. Having said that, I would also add a point that there is still a fair bit of uncertainty on the global side, right? There are so many announcements or comments on tariffs, right? And I think you need some kind of clarity to come on that point. That will give the market comfort, because what has happened between November and now, is a stronger dollar has resulted in EM outflows, and then even within that, India was a more expensive market with a bit of a cyclical growth slowdown. So everything, that is what has impacted Indian markets. And now going forward, it looks a better kind of a situation compared to say 3 months or 6 months back.
Interesting. If 2023 and 24 were years of US exceptionalism, it doesn't seem that 2025 will be any different, even if it's concentrated for now. But my question is largely this, Surendra. When a global money manager sitting out of Chicago or New York is getting 4.5 fixed, plus currency, plus the equity risk premium missing, why would that investor want to come to an emerging market or India? And if the FI flow is not coming back, I mean, if US interest rates were to rise, who knows, then that makes the case even worse, if you will. So if the FI investor is not coming back, can Indian markets on the back of the domestic flows still give a reasonable return, or is it a difficult argument?
Yeah, so a couple of points there, Neeraj. So this discussion always comes in when we have a correction. And despite that, the Indian market in the longer term has continued to compound fairly well. And these questions typically come in when there is a lot of pessimism.
Okay.
Right? Finally, what do investors come to India for? You have a GDP growth which we expect to be, say, close to 6.5% going forward, which is the best, one of the best in the world, at least among the major markets, right? And Indian companies are generally good at converting that to earnings growth. If you look at the 10-year growth CAGR of, say, Nifty or any broad-based index, it will be like anywhere between 11 to 13%. So that is what people come in for. There will be situations, short-term events where the currency depreciates a lot, so it becomes more difficult. Flows, and we have seen foreign flows. They have been volatile. If you look at the last 4 years data, there have been months of significant outflows, couple of months, and then you see stability and then money comes in again. So I think that would be kind of taking it too far, because we have seen this play out so many times. If the underlying growth improves, okay, and things stabilize a little bit on the global front, I think that's a clear situation for money to come back in India, even on the foreign side.
Cross fingers.
And last point, I think you started by saying US. So I think even in the US, it's been one theme which has been dominating. It's not a very broad-based market performance, right?
That's true.
And even there, I think with what happened with DeepSeek and so on, we'll really need to see how that plays out. I don't think it's a given that everything continues to play out the way it's played out in the last couple of years.
By the way, at some point of time in the show, we'll talk about that, because I think the word for 2025 got set in January itself, DeepSeek. I think that's probably the biggest telling point. But okay, if FIs were to come back, one of the larger sectors that they might want to come back is BFSI, because for the longest time, very well valued, aayega paisa, it hasn't come thus far. But we're seeing signs of that, right? Signs of there being some demand at the tape, wherein companies have delivered numbers. I mean, Bajaj Finance, a case in point, some others. How constructive are you relative to how you have been over the last 2 or 3 quarters on BFSI at large?
So overall on growth side, definitely when we look at it, as Surendra was highlighting, with respect to the tax cuts that will help in terms of the consumption and the retail finance demand. Even if there is some uptick on the capex, the overall corporate credit, which has been in say somewhere high single digit, we could see some uptick out there. And in initiatives which were taken by RBI to manage the unsecured portfolio, we have already seen steep moderation out there. It seems like largely that base is set, and on that we will see relatively better growth on the unsecured side going forward. So all this can actually lead to a percentage point or 2 higher credit growth than where we are today. And many of the players, and that's where maybe we turned positive on Bajaj, we turned positive on Kotak as well, because we clearly saw the visibility in terms of growth, wherein they would outperform the industry average by a significant number. So Bajaj, we are still confident, like easily 25% plus is something which will continue for next 3 years. Kotak also, we are pretty confident that they can give like more than 15% growth. And last quarter also their growth was amongst the highest in the private banks. So these 2 stocks in particular from the growth perspective.
Okay, but large banks at large, or large financials at large, Kunal, you would reckon that they are in a safe space right now, from a valuation perspective. Would that be a fair assessment?
Yeah, so when we look at it in terms of the historical valuation, last 5 years average, we are trading at almost 20% discount to that. Okay, and when we look at it in terms of the asset quality noise which was there, now it's almost factored into the estimates as well for FY26, FY27. If growth picks up, now the only thing that needs to be watched out is margin behavior amidst the rate cut. But if it's a shallow rate cut, it should not have that much of an impact, and everyone has displayed operating efficiency. So when you look at it in terms of the ROA, that is something which has surprised quite positively, despite maybe the noise around asset quality, growth and all. Large banks have been able to manage the ROA profile. But still valuations are like almost 20% down from 5 years average. So to that extent, there is definitely the room.
Okay, and just one follow-up on the banking space, the pecking order. You mentioned Kotak, of course. That seems to be number one on your list.
Yeah, and ICICI and HDFC are the other one. So we stick to that. Yeah,
you stick into the large ones. Okay, yeah. I'll come back on some of the other aspects as well. But Rashi, let me get you in. I mean, and again, I'm not completely sure of the valuations, but if we can talk about banking as being below 5-year averages. Maybe some of the cement names, and let's start with that because I'll get to tariffs in a moment with both you and Arvind. But cement maybe, again, a sector which virtually has gone nowhere, right? Now, if government capex has picked up and at some point of time if private capex were to come back, is cement in a sweet spot or are you negative?
Cement is in a sweet spot. But I think it'll have to be a little bit of a selective sweet spot in the sense that, of course, we've had a low base here. The first 9 months demand hasn't really gone anywhere. But now, like we're hearing, December demand was better than November, January's been better than December, and things are clearly picking up. So in that sense, I think the growth trajectory becomes like a clear-cut one, and we're not even exposed to like global sort of, it's not exported or anything like that. It's all domestic demand in a way. Second thing is that we need to play the stocks which are essentially kind of levered or, prepared to play for this growth with the cost efficiencies kind of playing out. Because despite demand moving up, the general thought process, or at least our view, is that pricing may not necessarily move up significantly. And that's because a lot of the capacity is again being added by the larger players, so that fight for market share still remains. So we need to kind of focus on the growth plays with, the cost benefits. So I think the players which are like the strong ones will continue to remain, like the valuations have come off a little bit, but not significantly. But there's a reason why they're kind of holding up. And they become a safe place to kind of be in. So stocks like UltraTech, for example, trades at about $180 a ton today. But I'd still say that would be our top pick because you're getting growth there, you're getting cost, and you're continuing to see the benefits of consolidation, and the acquisitions that they're making.
Got it. A follow-up there. Would market cap by capacity or EV per ton be the preferred way in which you gauge companies currently? Part one of my question is that because capacities are coming up, if you will, and therefore for a lot of companies they might look cheaper than what they were 5 years ago. And just question to roll into that. A lot of people are preferring some specific regional plays. I mean, investors tell me, for example, that they are bullish on the Andhra-focused companies because of the Amravati setup, etc., and stuff like that. Are you kind of constructive with themes like that?
Sure. So firstly, on the EV per ton valuation, I think it just becomes like an easy benchmark to kind of look at. We know replacement cost, again, depending on the dollar value, is probably somewhere around $90, $95 today. As we speak, and like I said, UltraTech trades at 180, right? So how does one kind of say that, one should still buy it? But in the context of the fact that they're continuing to grow, the market is obviously giving them that value. Then we have stocks like, ACC, where we also have a buy, but they trade at like $80. Dalmia trades at $80. And it's very clear, visibly so, that there's not a lot of growth visibility coming out of here. So the market is willing to give them a price around replacement cost. Right? So it just becomes like an easy metric to kind of work with. Of course, we work with EV, EBITDA on our valuations when we value the company. But then again, it's, 5-year averages, 10-year averages, what is the context of the market? But growth becomes the key parameter over here. Secondly, on the South, obviously there's a lot of expectation around growth. A lot of the M&A activity that you've seen has happened with the South-based companies. They've been the acquisition targets. Having said that, pricing has been most volatile in the South and the Eastern markets. So again, I won't be very nitpicking on these Southern players just because they're in the South. They have to kind of come with the other criteria
to make them work.
Okay. And then to tariffs, and question to both of you specifically on your themes. But Surendra, can I just briefly, before I get to Arvind, because I have a bunch of questions for him. But tariffs by and large, I mean, everybody's talking about how the next couple of quarters, forget fundamentals, forget valuations, focus on where Trump is going, where the tariffs are coming, and that will be the key point. Now, he's said April 2nd, key reciprocal tariffs coming in. How big a negative for a clutch of sectors, including pharmaceuticals or some of the others, including the pockets that Rashi and Arvind track as well, how big an impact could that be?
Sure. So I think the first thing I would say is there are still a lot of unknowns and uncertainties around that. So like whatever I say is kind of making certain assumptions. Everything could change, right? Like it could change tomorrow, for example, right? But the point I'm trying to make here is, like, if you look at some of the sectors which are more commonly talked about, you will also have to keep in mind angles like, say, let's take an example of pharma, right? Generic pharma, a lot of the supply in the US is from India, right? So how does it really impact the cost there? Because these companies don't make very high margins. So at some point, they have to pass it on to the channel and eventually to the consumer. So then how does it really work? Because it will lead to healthcare inflation. So that's the other thing to keep in mind. Like, let's take chemicals. I think there it also becomes important to keep in mind which are the other countries which manufacture chemicals and supply to the US, and how does it change the relative competitive positioning between those countries, right? So I think there are just too many unknowns at this point of time to be making a very informed decision. And then some of the other sectors where there is a tariff differential, like agri products or say jewelry, not a lot of the major listed players have an exposure there, at least to the US. So firstly, I would say India still looks relatively better placed versus a lot of other countries as far as the tariff is concerned. But there are uncertainties, and that is what I think the market is clearly pricing in, and that is why there is a lot of nervousness, and depending on the comments that come out, stocks and sectors do move.
Okay. Well,
and then finally, like, of course, like again, one of the things we'll also have to see is this more for negotiations? So what happens? That's the other angle. There is a talk of a bilateral trade agreement by, say, fall of this year. So I think a lot of those things are very unknown right now. So having a very clear picture, I don't think we'll get it at least in the next month or two.
Got it, yeah. If Mexico and Canada, anything to go by, some of it is negotiating tactics as well. One certainly hopes that stays that way. But it puts autos firmly in the thick of things, not tariffs per se, or not just tariffs, but everything that's happening around what India could do vis-a-vis global majors setting up shop, etc. in India. Let me start with the bigger macro picture first. Then I would also love to understand from you how you thought of earnings gone by. But how big a problem could it be for Indian automakers, particularly car companies, if large global majors set up shop in India? It's not that it's not happened in the past.
Sure. If you see till now, I'm talking about say, January or December, EVs in India from the Indian companies were aimed more towards people looking at value, total cost of ownership. But in the Auto Expo and over the last couple of months, we've seen companies launching more high-end models. We are targeting people who are, who want more premium cars, better features, connectivity and the likes. And therefore, they're at a higher price point also. So if we have global companies setting up shops in India, obviously their cars would be priced at a slightly higher point, right? So they are also targeting the same clientele that some of these recent models are targeting. So naturally, competition is going to heat up. Again, manufacturing in India, how much localization do these companies do versus, say, companies in India who already have a very strong vendor network. It's not just batteries and motors, obviously they are high cost items, but apart from that, the vendor network that these legacy companies in India have, the footprint, the sales footprint that these companies have gives them an edge. But again, you're talking about customers, if they are looking at more premium end electric vehicles, naturally the competition heats up, puts a pressure on pricing and therefore margins. Again, PLI is something that some of these Indian companies have. So PLI helps them become more competitive, 10, 12%, whatever they get from the government. So the government has taken these steps in the past to protect the interests of Indian companies. Nevertheless, I mean, and it's again a situation which is still evolving. If you have global companies coming in India, setting up shop, maybe take a bit of a hit on the pricing, but try to gain market share, it is going to heat up the competition quite a lot.
Okay, so we were wondering about why is it that despite selling 30,000 EV vehicles on the day of the launch, M&M got beaten down in one day straight, so on and so forth, right? We were talking to Anish Shah yesterday at the conclave. He was fairly confident of not just them, but every Indian company beating up or standing up to competition. What is already captured in the price for some of the four-wheeler auto companies when it comes to this? And what did you make of the results? Because I mean, Maruti's numbers, December, Jan look rock solid. M&M's December quarter numbers look very good. What have you made of the four-wheeler numbers and the commentary?
Sure. So, in our top picks, we have both Maruti, Mahindra and Hyundai. So, we are clearly very constructive on the four-wheeler space. And I think numbers have been better over the last couple of months. Even in sub-segments, even like hatchbacks and cars, which were weak for probably last 3 or 4 years, we've seen some sort of a stability, if not a revival. So, to that extent, yes, things are reviving. Of course, there's a large base, so our YOY growth number might seem a little underwhelming at low to mid single digit, but clearly we have seen a revival in the numbers, especially in passenger vehicles. But again, all these three companies, Maruti, Mahindra and Hyundai, they have launched their born electric vehicles just last couple of months. So naturally they are playing into a space which till now was not well discovered in India. Models we've had till now were more ICE models or ICE platforms converted to EVs.
Right.
Apart from some of the, again, global companies which had a few models. But most of these companies, the Indian majors, had ICE model converted to EVs. You talked about Mahindra and the launch. It's probably for the first time we are having a born electric vehicle coming into the market. Yeah. And perhaps the benchmark is set up by the previous models where you had 50, 60,000, 100,000 numbers in the first hour of booking. I guess that benchmark will have to be recalibrated. We're talking about a different price point, a different customer segment, and not only a product, but even a segment which has not been tried by customers, right? So it will take some time to play out. So, let's see how the actual volumes pan out. It's still 5,000 a month, the capacity, so they are 30,000 in a way. Theoretically, 6 months of bookings have been done. Let's see how it plays out once the car is on the road, what's the feedback, what's the word of mouth publicity. I think those things will play out.
Maybe just to add to that, your question was more on Indian companies kind of holding up to competition. See, I think from a market perspective, the market always cares about increased fragmentation in any industry. Indian companies may hold up, right? Just look at the example of what's played out in paints.